Good morning. We will start with monthly recommendations. First, we have Bharti Airtel with the current market price of 1902 and first target of 2130. It is the second largest telecom player in India. First is Jio. In terms of market share, they compete head to head. Jio has around 40% market share. Airtel just over 32-33%. So last year there was a tariff hike of around 10 to 12%. So they have increased all their telecom rates as well. So there were general investor concerns that will Vodafone and BSNL start getting their share, but no such things have happened. They both have still remained very strong despite of tariff hike. And even next year they are planning for one more tariff hikes. So average revenue per user, which is one of the most key things we look for in telecom companies, for Bharti Airtel it is around 213 and for Jio it's around 197. Apart from this, the company has done well over the past 3 years. They have a huge business in Africa as well, telecom business. Around 30% of their revenues are coming from there. Apart from this, they also have stake in Indus Towers, so they get revenue from that as well. And this African business particularly, they turned profitable over the past 3 years. One important thing to look for is last month during the Jio's AGM, they have told that the Reliance AGM, they said that Jio IPO will come first half of next year. So the valuation of the Jio IPO is very important. So once the Jio IPO's valuations are out, Airtel will also rewrite itself accordingly. We don't have a lot of details about that yet, but anyway, for this next year first half it should be out. Mostly, even Reliance Finance, when it had come out, even without starting any business, they had listed at a premium, and it is still running at a premium. Their business is rarely starting. So Jio should anyway be at premium. So Airtel right now trades at around 38 PE. So we are assuming that that the PE it will not be at 38 that Jio is listing. So this rewriting will help the stock boost itself up. Apart from that, they give decent dividends as well, and company is very strong for long-term investors. Next, we have Caplin Point. It is a mid-cap pharma company. Unlike normal pharma companies, they employ a bottom-of-the-pyramid strategy, which means, see, most of the pharma companies, Lupin, Cydus, Divi's, most of these, their core revenue focus is US and developed markets like US and Europe. But for Caplin Point, their core revenue comes from Latin America, countries like Mexico, Chile, Ecuador, even Africa. Last year they had 60% revenue increase from Africa as well. So they have a very bottom of the pyramid approach towards finding markets and clients. So because of this, if you look, their net profit margin is more than 25%. Compared to all the other pharma, normally all the other pharmas, they enjoy only 15 to 18% net profit margin. So recently they have also entered US, so they want to shift their dependency from Latin America and Africa to US. That little risk is there, but anyway, the revenue contribution from US will be very small. So unlike other companies, even if there is a negative tariff news, it will not impact this company very much. And they also have very strong cash. Last 3 to 4 years, their top line and bottom line growth was over 15%. They are around 1,100 crores sitting in cash. So company has a very strong balance sheet as well. Next we have Sensar Tech. It is an IT company. Current market price 818 and first target of 920. This was one of our best picks of last year, and they performed very well. I think around 650 it was, and it went almost up to 900. Now recently most of you might be wondering why we are recommending an IT stock. Because most of you must have noticed, Q1 was very poor for IT. Most of the all the huge companies gave only single-digit growth, and management is also giving guidance for the same. Even for Sensar Tech, around 60% of their revenue is from US, only 30% from India and rest of the world. So the US risk is definitely there, but compared to all the other companies, when we looked at the Q1, we were not expecting very good results for Sensar, but they have compared to others, they have done well. And management also, when we were attending the con call, they said that all the clients are in wait and watch mode. They're not really giving orders yet. They want some clarity on tariff. So for those investors who are looking to invest in any IT company, for them this is a pick. Obviously, this tariff and there's no news about tariff on services yet, but if that risk is always there, that is to keep in mind. But as a company, it is a strong company. It is a mid cap, the small cap company, so the growth potential is also there compared to all the other top caps. And next, we have Surya Roshni with the current market price of 292 and first target of 335. They are the largest metal pipe exporters in the country. They're also into consumer durables like fans and lights. This is similar for steel and even chemical industries. Both these industries have heavily suffered after COVID due to excess dumping from China. So we are expecting that their steel business will do well, particularly next 2 quarters. They're expecting some good government orders as well. Coming to their other business, the light and fan, that is only around 25% of their revenue. Light is again, it is a very competitive industry. Even a big company like Crompton, they have not really been able to improve their light sales performance. It is an extremely competitive industry. So because of that, we are not expecting much improvement in that revenue, but we're expecting steel to do well. And again, company is very strong. They have been in the industry for a very long time and at a very good PE right now, only 22. So that is why we are recommending. And finally, we have Pricol with the current market price of 518 and first target of 580. It is an auto ancillary company. One of the main reasons why we are recommending this is due to the recent GST cut. From 28%, they have cut GST to 18% for all auto ancillary products. And the dashboard in front of the vehicle, so they are into that business. They have top OEM customers like Tata Motors, TVS, and Eicher as well. Company has very strong balance sheet and very good cash balance as well. And with GST cut, we are expecting very good cash flow to come in. With cheaper products, we are expecting more order inflows as well. If you look at all the other auto ancillary companies like Gabriel, Motherson, and Bharat Forge, they have all they are trading at a little high valuation right now. So when we are looking, Pricol's P is around 37, which makes it a decent pick. Now coming to last month's review, Nifty gave a return of 3%. Our stocks did fairly well. We gave a return of 7%. Sri Digvijay Cement, we have achieved targets. Rest all are doing fine. L&T is only trading almost flat. There's no need for concern. They will do well. All the fundamentals are looking very strong for them. Even order inflow is very good. Even Lupin, in spite of all this drama from US and a lot of uncertainty, the stock has really not been affected so much. It's doing fairly well. This is just one thing we wanted to share for our clients. This is regarding investor grievance. If for those, just for information, for those if you have any complaints or any redressals to be dealt with, you can go to this website. It's just for your awareness. Okay, thank you.